Okay, so we're going to do our weekly update of tanker stocks, significantly NAT. But we're also going to talk about some more tanker stocks that might be a better buy as they have a low PE earnings ratio, as one commenter pointed out. So let's get right to it. All right, excuse that for a second. Okay, so by the way, you can find all this info that I'm about to present to you, or at least the tanker rates, on NAT's website. So you just type in NAT Investor Relations, and you come up to this website, and you scroll down, and you can they do weekly updated tanker market reports. So you can just click here, and here we can find the spot tanker rates, which is basically how much companies have to pay to store their oil or to ship their oil on NAT's vessels. Okay, so here there is a current uptrend for their Suezmax vessels. NAT owns 23 Suezmax vessels. And here last week, the spot price was 10,400, which was an increase of the previous week, which was around 10,000. And so as you can see this week, again, about an increase of $3,900. So that's a very good sign. That means that the spot rates are increasing. And NAT owns Suezmax vessels, but also if we look at the trend in the very large carriers, which carry 2 million barrels of oil, versus Suezmax, they carry 1 million barrels of oil, again up by 10,000 this week, as is Aframax vessels. So this uptrend is looking really good. And I mean, to me, it seems that as the spot prices increase, so does the stock price. And I mean, as you can see this week, especially today, NAT is up, as of recording this video, 7%. I mean, we look at the past week, and it has been up around 4%. So it seems as if that as a spot rates increase, so does the stock price. And I mean, this is reasonable because tankers get their profitability from spot prices, but however, they also get their profitability from contracting out their ships for months in advance. So this spot price does not reflect the actual money that they're getting per ship for this current quarter. So they said that in their Q2 or Q1 report that they're actually earning around, I think it was 40,000 per day per ship, not 14,300 this week, right? So just because they're contracting out their ships, they're earning more than this amount, but this is also a good sign for into the future. And again, if we look at the trend in the summer and coming into the fall and winter, it generally picks up, so the tanker rates pick up. So again, that's a good sign for NAT. And again, right now, I'm currently down on NAT. So these are the three positions I have right now. And Facebook is my biggest winner right now, up 41%. I'm down 21% on NAT. And Walgreens, I just bought yesterday because they crashed. I'll be doing another video on that shortly. And so today they're just up a bit. So yeah, NAT is not looking good right now, but I'm confident going forward that they will be, especially as the prices pick up. So again, what's the stock price doing? I mean, today it's jumping by 7%. In the past 5 days has also jumped. But I mean, like the long-term trend, it has been going down and down 21% over the month. And I mean, other reasons why it might be going up were because of not only the spot rates, but also, I mean, this one is not necessarily why NAT is going up, but OPEC is going to hold a meeting to discuss whether to cut production further or to reopen production of their oil. And they're just showing that today they had some sort of special workshop on sources for oil data, which informs whether or not they need to pump out more oil or reduce production. So again, if OPEC increases production, this looks good on the supply side for oil. And if Rona cases continue to rise, that could again implement more stay-at-home orders. And then that means that, again, there would be an oversupply of oil, which means that the spot rates of tankers would increase, which would be looking good for NAT. But who knows what they're going to say after the OPEC meeting. And again, just some update here. And if we look at the cases of new viruses in the States, we can see that the cases are just increasing. So we look at this week, and I mean, the long-term trend has just been new cases just increasing overall. So again, this doesn't look good and may cause a second wave lockdown. And if we look at the world cases, they're also on the rise. And again, that doesn't look good for the reopening of the economy, but it does look good for companies such as NAT. So that again, if they go into supply/demand shock, then NAT will be able to increase their prices. So again, this just shows you the new cases per day. It's by the New York Times, and these are all the significant clusters. So we see these states such as California, Texas, Florida, Arizona, and all of these have had a spike in cases recently in the past 14 days, as we can see here. So, I mean, this doesn't look good, and again, could be further contributing to a lockdown in the States, which is, again, a major economy. And again, it would be looking good for NAT spot price. Anyways, so first we have the cyclical trends, as we can see here, that the spot price generally tend to increase throughout the summer into the fall and winter. Then we have the increasing coronavirus cases, as well as a future OPEC meeting. However, I received a comment on one of my videos saying that when we compare oil tanker stocks, NAT has had a lot of publicity, and therefore that jacked up the price to earnings ratio. So I decided to do my own research on some of these companies, and this is just a brief overview. So you have to understand, I know NAT pretty well in depth, but I don't know DHT and TK tankers. I know that NAT focuses specifically on their Suezmax vessels. They have 23 of them. And they think that that's a good idea just to focus on one fleet. So because the Suezmax vessels are more versatile as compared to the VLCC carriers, which can carry 2 million barrels of oil but are less versatile. And I don't know that info on these other fleets, but we can look at some superficial info. So again, we look at the PE ratio for NAT. It's 26, which is pretty high. It has a dividend rate of right now of 13.8% ish. And now let's just look at their quarterly earnings. And I mean, for me, this is one of the main reasons why I decided to invest, is because they they decrease their revenue, but they're also increasing their net earnings, which is a good sign to me. And they started becoming profitable in the fourth quarter of 2019, and this just continued to increase into the first quarter of 2020, and I expect them to have good numbers for Q2 2020. We'll just have to see, and we'll see where their revenue is at. But again, I expect this significant change as well. So DHT, let's go on. So their market cap, I believe, is slightly less than NAT. NAT, or it's slightly more than NAT, is 637 million. DHT around the same market cap. Significantly lower PE ratio, so 6.58, and a dividend of 26%. Wow, that's huge. Okay, so, and they're trading around $5 right now. And we can see that they have solid profits, and again, net profit in fourth quarter 2019 and first quarter 2020. And their revenue has also increased, but their bottom line has not necessarily improved, even though they had increased revenue, whereas NAT's has. But again, I don't know if this means much, but we'll just have to see in the future. But again, this looks like, again, it could be a better deal. And I just wanted to get in this one quickly, so I didn't necessarily do my research on all these stocks, which just shows you that, yes, you should do your research before buying into a stock. And I think DHT would probably be my favorite, as well as EURN, but let's see here. So DHT, I believe, was 6 PE ratio. So TK Corporation, they don't have a PE ratio because they have negative earnings, I believe. And yeah, this is, if you look at their quarterly results, they actually lost in first quarter 2020. So again, to me, this is not a good sign, especially as so many tanker companies are becoming profitable as a result of the pandemic. But I mean, who knows how this is going forward? Again, I wouldn't invest in this company just because they're not profitable in spite of the current situation. So again, I would say TK Tanker is probably not the best play at the moment. So Frontline, let's see. So they have the lowest so far, the PE ratio at 5.25. Dividend 38%. Holy cow. Wow, okay. So let's see about their profitability. And I actually like this company a bit more just based off of these numbers. So they're increasing revenue, but they're also increasing their net earnings quarter over quarter when we're comparing first quarter of 2020 with fourth quarter of 2019. So showing that they're actually profitable pretty significantly into the fourth quarter of 2019 is a very good sign. And I think this is, I would have to say this probably beats DHT. And the market cap is over $1 billion. So Frontline, again, looks like a good buy as compared to NAT, and even a bit more of a good buy than DHT. So this company is Diamond S Shipping Company, ticker symbol DSSI, and very low market cap. PE ratio, again, slightly higher, does not have a dividend. And again, they're earning similar to to the other FRO and DHT. So I mean, again, just because they don't have a dividend, maybe I would stick with NAT. But again, it might not be a bad play. And International Seaways, INSW. So their PE ratio is pretty high. They only have a dividend of 1.53%. Let's take a look at their earnings quarterly. Again, similar trend here, but just because their dividend is quite low and their PE ratio is pretty high, I don't know if I'd invest in this company, and also very small market cap. And this one is interesting. I talked about this in my previous video, EURN. So this one I did a bit more research on. It's pretty highly diversified. In terms of they have Suezmax vessels, VLCC carriers, and some other fleets. And I think they boast that they're the largest shipping company internationally. So let's see what their earnings are. And again, I really like this. So again, they're able to increase their earnings as well as increase revenue. So that's a good sign to me. And their PE ratio is 6.06, and they have a 13% dividend. So I'd probably rank, just based on these superficial numbers, I'd like to do a bit more digging, obviously. I'd probably rank Frontline Limited as first, just because they have a very low PE ratio, pretty huge dividend, and a significant increase in their earnings and revenue quarter over quarter. And then I'd probably have to say it's between EURN and DHT, and just because I did more research on EURN and because they have a pretty good payout and they're well diversified, I'd probably rank this as second, DHT as third, and then NAT would have to be fourth. So again, I'm still bullish on NAT, and if you have NAT, again, I just hold it, because I think that good things are to come on their stock price. But anyways, that's the end of the video. If you have any suggestions or comments, please let me know, and please hit the thumbs up button and give my channel a subscribe. And thank you for watching. Have a fantastic day.